Something major just happened in the world of cryptocurrency. And no, it's not a meme coin or a billionaire's tweet. On July 31st, 2025, the newly appointed chair of the U.S. Securities and Exchange Commission, Paul Atkins, unveiled Project Crypto, a sweeping regulatory initiative aimed at reshaping how the U.S. treats digital assets. And if you've been following crypto for the past few years, you know this is a big deal. So what exactly is Project Crypto? In plain terms, it's the SEC's new roadmap for how cryptocurrencies and blockchain-based assets will be classified, traded, and integrated into traditional finance. Instead of doubling down on strict enforcement and ambiguous regulations, Project Crypto focuses on clarity, accessibility, and innovation. Here are the three big changes. 1. Clearer asset classifications. For years, there's been an endless debate. Is this token a security or not? Project Crypto proposes a streamlined framework to determine this upfront, removing the regulatory gray area that stalled innovation and lawsuits for years. 2. Support for tokenized securities. These are traditional assets like stocks or bonds, but issued and traded on the blockchain. Under this new policy, companies can tokenize real-world assets legally, making markets more efficient and accessible, even globally. 3. Licensed super apps. This is a game changer. The SEC will now support the development of regulated platforms where users can trade, stake, lend, and borrow crypto all in one place. Think of it like a secure, legal combination of Coinbase, Robinhood, and DeFi in a single, user-friendly app. Now let's zoom out. Why is this important? Well, up until now, the SEC's approach, especially under previous chair Gary Gensler, was often described as hostile to crypto. The focus was enforcement, not enablement. Exchanges were sued. Startups fled the U.S. for friendlier regulatory homes. But Project Crypto changes the tone. Instead of asking, how do we shut this down? Regulators are now asking, how do we do this right? And that sends a powerful signal to developers, to businesses, and yes, even to governments, that the U.S. is ready to embrace the future of finance. Project Crypto also aligns the U.S. more closely with what's happening abroad. The EU's MyCA framework and even recent shifts in Asian markets all show that regulatory clarity is key to growth, not a roadblock. So what's next? Project Crypto isn't a law yet, but it lays the foundation for future legislation. It also opens the door for public-private partnerships, where developers and regulators actually collaborate instead of clash. Expect to see more tokenized assets from traditional banks and investment firms. Regulated lending protocols that combine crypto tech with traditional safeguards. And possibly the rise of nationally licensed crypto super apps that bridge the gap between old finance and new tech. It also means that some crypto projects that were previously sidelined might now gain legitimacy, with clearer guidelines on how to operate in the U.S. without fear of regulatory whiplash. Bottom line, the crypto space just entered a new phase, one where it's not just tolerated, but invited to the table. Whether you're a developer, an entrepreneur, or just someone watching the space unfold, Project Crypto is one of the biggest regulatory pivots we've seen in years. So keep watching this space because the future of crypto might just be less Wild West and more Wall Street with a digital twist. Like this kind of trend breakdown? Hit subscribe and we'll keep bringing you insight into the forces shaping crypto, AI, and the future of markets.